Hey everybody, welcome back. So I'm going to do a video right now on how to use my Algo Box indicator. And this is an algo that I customized and created over the last year. I've been working on it, and it has benefits and it has downfalls, but the more I work on it, the more I refine it and find out exactly how to maximize the benefits out of it. And recently, just this week, it gave me 3 trades that produced over $10,000 in profit that I posted in my live group coaching room here. And we'll talk about those 3 trades. We'll talk about how to use the boxes, what the boxes are, and why you want to use them. So, if you don't know who Nicholas Darvas is, he was a guy in the 50s that was a dancer, and he created a method where he was able to make $2 million over the course of 3 years in the stock market simply by trading breakouts out of congestion zones. And that was all he did. He's probably the founder of the original momentum trading method, and his methods still work to this day. However, they have very specific limitations. Now, I was always fascinated by Darvas because he was really just an amateur guy that came in and made $2 million. And in 1950, that'd be like making $20 million today. So for a long time, I worked on a similar method that created boxes that were even more powerful because I understood what Darvas was trying to do, the concept behind it. And so I'm going to go over what my box algo indicator does right now and when it works best and when you can just make absolute insane amounts of money and get crazy risk to returns on it and when to avoid it. Okay, so basically what you're looking for is it's a volume based indicator. So whenever you see a high volume move, for example, you see this move here that took place here. Let me just get rid of these here. See this move right here? And this is just like a random move, right? So whenever you see, even this one right here, see this high volume move where the market moves higher off of that level, right? And then another high volume move here and the market moves higher off of that level. Well, that's basically what Darvas was doing, right? He was looking for places where the market was making very large moves, directional moves, and then waiting for volume to contract, price to constrict like a spring, and then when you come out of those areas, you get enormous returns. Okay? So, for example, you have a move here. Let's just look at this one. And this is just a random move. I just have this chart up right now and I saw it, so I'm going to talk about it. And you can see there's this big move in volume right here. Now, you'll notice that price down here, after you get the big volume here, after you get the big volume here, and the directional move, this is really important. The big directional move. You'll notice that price goes sideways and volume dries up. Now, basically that is what the algo is doing. It is looking for times when there is a relative low volume to previous high volumes. Does that make sense? Relative low volume, because this might be high volume compared to here, but it's relative low volume to previous higher volume. So when the algo starts to print and it gives these boxes, your trade is to trade a breakout of that box. Okay? Now, why does this work better? Because you're not going to trade every breakout. You're going to trade very specific breakouts that you can see in this case my box was very, very tight, right? So the Darvas system would get you into a trade up here, but my trades get you in down here, okay? So there was no legitimate trade here, but that's the concept behind these boxes. You're looking for a high volume directional move, a box, and a breakout out of that box in a continuation of that move. This is a very good example of a trade that you would have made some very good money on. Now this happens to be a 15-minute time frame, and there's some other conditions, but I want you to understand the basics behind these boxes, okay? The other thing that these boxes they can do is they can signal when tops and bottoms are happening very, very effectively, because when you get multiple boxes that are at the same price level, it means that price has gone into what we call a compression zone. And when you come out of those compression zones, when you have multiple boxes at multiple levels, when you come out of those compression zones, you can catch really big moves. And that's exactly the trade that I took this week right here. When we broke out of this box on square, I was able to get short by put options, and I was able to almost double my money, well, not quite, about 60% of my money on that one options trade. The same would hold true with Tesla. There were multiple boxes, and when we broke down out of that box below the VWAP, I was able to take that trade short. And this trade here, I didn't get the full move, but if you bought put options at that time right there, that resulted in $7,500 on $2,000 risk of put options. But that's a bit of an advanced version of the box. And so the real easy way to use the box is to look for a high volume directional move, and then you look for the box to set up. And you can see here you get a box that sets up right here. You break out one candle above that box. That's where you buy your calls. And as you can see, again, if you would have bought calls at this level for $2,000, they would have easily doubled in price. Now I personally find that these boxes work really, really well on a 15-minute time frame. They do work on a daily time frame, but they work very, very powerfully on a 15-minute time frame. And 3 trades that were called out in my trade room live were the Tesla, the QQQ, and the Square trades. Okay, so here's the simple rule for using the boxes. The very, very, very simple rule for using the boxes on a 15-minute time frame. What you're looking for is you're looking for a box to form. Once a box forms, you're looking for a candle to close outside of that box. And to keep you on the right side of the market, you're only going to take short trades when you're below VWAP, and you're only going to take long trades that break out if you're above VWAP. Okay? Those are very, very simple rules. Now, if you have a large directional move that happens before your box, that's even better. That's even better. But you don't always need that. Ideally, you can see in this particular case there was a larger time frame directional move, and then we get a box push up. We get multiple boxes here. It breaks down, and that gave me an incredible, incredible trade. Now this will also work on a 1-minute time frame, and I'm going to give you some examples of that. So here's an example. I'm just a random chart. We get a large directional move, we get a box, we get a breakout. Now that's a great little scalp trade, right? We get a large directional move, we get a box, we get a breakout, and down it goes, right? So what you want to avoid is you want to avoid times when there's not around lunch hour, because volume will relatively dry up, right? But if you can find, here's another one, here's another good example. You get a directional move, you get a box, you get a breakdown, and away she goes, right? I'm telling you, these boxes are extremely powerful. So obviously these are three very good examples on Tesla because Tesla has been moving, but you're not always going to get a large directional move. So for example, on a day like today, you get a directional move, and notice how the top of the box doesn't break, right? And on a day like today, these boxes are not very useful. They're much more effective when you get a large directional move and then you get a dry up, right? So for example, again, these are day trades, right? You can see that you want to avoid these boxes on rotational days. Right, so here's an example here. The day was rotational. You do get a move. You get a box. Now remember, you can only take longs here. You get a breakout there of that box. And that doesn't look like much, but that's a decent little scalp, right? That's a decent little move because what you're going to do is you're going to be placing your stops, in this case, right below the box. So that trade there gave you, if you were risking $350, you made $1,200 on that little trade right there. See if we can find some other examples. Again, a directional move, a breakout of the box. That trade is just crazy sick. Crazy, crazy sick. So on a 1 minute time frame, you're going to get a lot, you're going to get more signals, but it's really important that you watch and you're going to also get more false signals. You just don't want to be trading it in random rotational markets. Markets like this, it's not going to work very, very well, right? And of course, on a larger time frame, a 15-minute, that's kind of what you really want to see, right? You want to see a directional move, a box form, and then a breakdown right there of that box. And believe me, that trade gave you a lot. Now, where do you get out of the trade? Well, you get out of the trade when another box forms, right? So the way I like to trade it is on a 15-minute time frame. I like to trade it with options and short-term options, right? And on a 1 minute time frame, then I just like to day trade the stock, okay? So this is kind of an introductory video to the boxes. So some simple rules. If you buy this box indicator, you're only going to be taking trades if you want to just keep it plain and simple without using a directional move. You're just going to be taking trades that are on the boxes form, breakout of the boxes that are on the shorts only below VWAP, longs only above VWAP, okay? It does work counter trend sometimes, but usually in counter trend trades, usually, and again, the other rule is that you get out when another box starts forming. So in this case, if you took this breakout of this box, this would have been a small scratch, right? If you got to be careful because you want the box to form on the same day. So for example, this actually wasn't a trade here because this box formed on this day, right? That really wasn't a trade. So you got to be careful. You don't want boxes that form on previous days. So here's an example. This box formed on this day. It broke out right there. You get long calls on that trade because you're above VWAP. You hold that trade, you hold that trade, you hold that trade. And unfortunately, this didn't make you very much money, but you made a little bit of money. You get out when another box is forming, right? You can always get back in. So here's an example where you get short here, right? Box formed, you're short there, you're below VWAP, right? And your stop in this case would have been the other side of that box. So that one's not going to work. But if you just filter this, like if you want to trade every trade that the box offers, it will make money. But the best way to do it is to trade it when you have a directional trade, right? On a larger time frame, it's going to be a little bit more difficult to find those directional trades. If you're day trading it again on a 1 minute time frame, it's going to be a lot easier to find those directional trades, right? Tesla, boom, off you go. See if we can find some other ones here. AMC, it gave some sick trades this week, some absolute sick trades. Okay, so let's look for a directional trade. Remember, you can trade every signal if you want to. So for example, AMC, a box formed here, it broke out, gave you a beautiful short. You're below VWAP. Now here's one that you would not have taken because in this case a box formed but it breaks out above VWAP. You would not take that, right? Here's one where a box forms, it breaks out above VWAP. Now day trading it, the exits about another box forming change a little bit if you're on a 1 minute time frame. If you're on a 1 minute time frame, if another box forms, that's fine as long as the other box is higher. If the other box is lower or equal price, then you get out, right? So here's an example where it broke down here. Box formed, it broke down. Now, this is a counter trend trade, but when you get better at using these boxes and you understand larger time frames a little bit better, you can do some counter trend trading like it looked like I did on the Tesla and the square trades, but I really wasn't, okay? Because the larger time frame was more accurate. But look at this trade here. Look at the trades it gave on AMC this week. So there's a box, it broke out, okay? Another box, it broke out long above VWAP. Another box, it broke out long. Another box, it broke out long. Another box, it broke out long. Just to give you guys some idea, if you would have got any one of those 4 boxes, you would have taken a $300 investment to over $10,000 in profit, right? You want to avoid days like today where it's choppy. You want the directional moves. There you go. There we go. This is exactly what we're looking for. You get a directional move. Boom. There's a box. There's the breakout. You're in there. Your stop goes below the low. Right. Now again, when you're doing this on a 1 minute time frame, you're going to get boxes around 11 o'clock and 12 o'clock. So you got to kind of ignore those. And on a 1 minute time frame, you really want to it takes more skill. That's why I've included VWAP here, because usually I'll trail my stop below VWAP when I get these signals. As you can see, look at that. I mean, that just goes crazy. Not that you would have held it, right? But that gives 6 to 1 on your money. Okay. See if we find anything else here. There you go. Here's another one. Strong directional move. There's your box. There's 2 boxes. Watch the risk to return on this, guys. You're in there. Your stop goes below that box. You already have 3 to 1. It gives you as much as 8 to 1 on your money. Now, this is AMC, and these are extreme cases, right? You're not going to get that all the time, but you would be surprised. You'd be really, 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 really surprised at just how many times you can get incredible returns using these boxes. If you filter for strong directional moves with high volume, they're really, really, really powerful. Really powerful. The only caveat, I probably would not trade penny stocks. These boxes are actually really, really good with penny stocks at picking some tops. So I think this week, if I'm not mistaken, I did use the boxes to find some shorts on some penny stocks. I can't even remember what I traded this week. Oh, LEDS. So this was a penny stock, right, that allowed me to find a top, actually. Okay. Watch this, watch this, watch this. Strong directional move. Boom. There's a breakout of the box. There's your long. Now, in some cases with penny stocks, if you have higher time frame, and I have a whole penny stock course that you should probably take if you're thinking about taking trading penny stocks. If you have a higher time frame where there's high resistance, you can use the box as picking a top. And on Friday, that's exactly what I did on LEDS, where occasionally you can use these boxes to pick tops. So LEDS broke out really strong on Friday. So taking that first long was fine. But if you would have gone to a higher time frame, you can see that LEDS was really super overextended. Really super overextended, and there was a big liquidity level here at 24. Now again, I have an entire course on penny stocks. It's only $2.99. If you go to my website, you'll see I have the box. The box is up there for sale now, and I have a whole penny stock course. If you want to trade the boxes to pick tops, I would probably recommend that you take the penny stock trading course as well too, because that's really, really, really key for that. If you do want that, I'll give you the penny stock course at half price, so you can get both of them for, let's say, $600. Is that fair? Write me if you want to get both of those, okay? So the boxes can be used for tops on penny stocks, and I have used it very, very effectively on penny stocks, but that's really a whole other topic, okay? So these boxes are great. They're great for day trading. They're great for swing trading on a 15-minute time frame. I had three trades this week that were posted live. If you risk $2,000 on the 3 trades, I'll show you another way that I did trade this on a penny stock this week. WKHS. This trade right here. Now, that's a little bit tricky because I did cheat on this trade. You can see on WKHS we got a box that formed the day before. The next day you'll find that when you use this a lot, these boxes work as support and resistance. You can see a box formed here, came back down, tested it. Not all the time, but a lot of the time they do. And in this particular case, we had this box that formed here, and I actually took this short right there. It didn't do like super stellar, but it made me $1, right? Made me $1. There was a couple other ones, SDNL, right? SNDL, OCG. Here's one that broke out, right? A penny stock. That worked pretty good. These are stocks with very high IV. RKT, no. I think I used it in the case of RKT intraday on a 1 minute time frame. Yeah, there's the trade. What happened with RKT was GME and AMC were breaking down, right? And I knew RKT was basically another one of the meme stocks. And late in the afternoon, I was able to get a box breakdown on a smaller time frame right here off of this move. So, I'm showing you some advanced stuff on how to use the boxes, but if you want to keep it simple, stupid, take box breakouts below VWAP, short only, above VWAP, long only. The better box, avoid boxes in rotational markets, and it's better to take boxes in where after you've had a good directional move. See if there's any here on RKT. Yeah, here's another good example. Strong directional move, box, breakout, long. Okay? These boxes work great, guys. They work absolutely great. So if you like what you see and you want these boxes, head on over to my website. They're for sale, $4.95. If you want the penny stock course with it, I'll give you 50% off the penny stock course. Any one of my products that you buy, you can use as a credit to upgrade to one of my other products. Okay? Thank you guys. Love you all. Bye for now.